Wow, talk about an explosion in silver price over this last week. Guys, take a look at this. We're going to go back 1 week's time to Friday, November 21st. Keep in mind, I'm recording this on Friday, November 28th, and you can see silver was trading for $49.79 here on SD Bullion's website. That's what it closed for. Look at this, though. Intraday trading right now, we are sitting at $56.32. That is a massive increase of over $6 an ounce, almost $6.50 in just 1 week's time. Now, if you're like me, you're probably wondering what is causing the spike. And recently, I've actually talked about why I believe silver is so important, regardless of what it does. But this is certainly something that a lot of silver stackers have been looking forward to for a long time. Remember, going back to May 31st, we were sitting at just $33 an ounce. So today, we're up $23 in just the second half of the year. And in my quest to find out exactly what's going on here, because obviously there's a lot of stuff going on behind the scenes, I ran across this article called Precious Metals Watch, and it says silver blast past $55 as data and Fed's bets collide. Now, we are going to read a little bit of this article here, but I really want you to pay attention to what's going on here because they say a lot here. And you can see right now they have spot silver at around $56 an ounce. And this is a static article, so this isn't even updating live. It's probably still going up at this time. Oh, one thing they did point out here on this article, though, is that the gold to silver ratio is now tightened up to 75-1. And if we go back to SD Bullion's website, you can even see that right here. Right now, we are sitting at 74.89. That is down 3 ounces per 1 ounce of gold just today alone. And one thing I want to point out here before we get into this article, and that was a really weird zoom, is right here. I did a video back in April talking about a guy who went into Mid-America Coins actually to trade some of his gold into silver. And he got I think it was right around 100 ounces of silver for every ounce of gold that he gave to Mike there. And many people said, I would never do that. I would never trade my silver into gold. Well, look at him now. Even if he loses 5 ounces of silver, guys, just trading it back into gold, he would be gaining 20 ounces of silver for every ounce of gold that he gets back. So in other words, I think it was 40 ounces of silver. So if you do 40 times 20, that is 800 ounces. So he can get all of his gold back and still be sitting on 800 ounces of silver. At least I think that's right if I did my math. 40 times 20, yes, 800 ounces of silver. But anyway, let's get back to the article here. And of course, we are not going to read this word for word, but there is a couple of things that I wanted to point out that he said is part of the reason that we are seeing this huge spike. So we'll start off with how he introduces, and he says, silver extended its powerful rally on Friday, breaking to fresh record territory above the $55 mark in early North American trade. The move followed a turbulent week that featured a rare technical outage at the CME, a sharp drop in regional manufacturing activity, firmer durable goods orders, and new labor data that highlighted a still resilient job market. So he's pointing as these things that all kind of hit together all at once to just make silver explode. And then I want to point this out right here. He's actually updating this article as I read it, because he goes, live update as I read this. As this article is being written in the late morning and early afternoon trading, live spot silver has already pushed above 56, with several feeds showing prices at around 56.05 per ounce. The rally has continued the climb even as the ink on this analysis is drying. And I even want to show you this on my Kitco app. So take a look at this. It is currently 11:48 a.m. That's the timestamp right here on November 28th as I'm recording this video. And look at silver up $2.98, now showing 56.34 even on Kitco. And I want to show you the percentage gain. Look at this. 5.59% just today alone. And remember, like I had said, we went back to the end of May at $32.99. Gold is up, but only 1.38% as I'm recording the video. So you can see silver continues to go up even as he's updating this article, looking at the Kitco app, and the percentage gain was insane. He had 56.05 last time he updated it. It's higher still, but take a look at this. Price action, silver leaves gold in the dust. I just showed you that percentage gain. Well, the reason is he talks about a couple of things in this article, but right here, the latest leg higher, it says it began overnight after trading resumed at the CME group following its longest technical outage in years. When the dust settled, silver had pushed well beyond its prior intraday peaks at $53 an ounce, or near $53, that were set earlier in November, with spot quotes now carving out a new trading range above the mid-50s. So you can see this article is written probably in the 55s, even though it is over 56. So Going down the data behind the spike. Now, we're not going to read word for word, guys. We're not going to read all of this article to you. You can pause and read it if you like, or I'm sure you can find it via Google. If I remember to, I sometimes forget, I'll put a link down below. But anyway, the data behind the spike. So right here it says, the breakout did not occur in a vacuum. It followed a cluster of United States data releases that painted a mixed picture of the real economy and reinforced expectations that the Federal Reserve is edging closer to delivering another rate cut. Now, we've talked about rate cuts in the past, not necessarily this one, but what I will tell you is that when there's an expectation for a rate cut, a very high percentage chance that there is a rate cut or a rate change at all going to happen, generally that is priced into the market before it actually happens. So don't expect when the rate cut actually comes for there to be another spike, because it is already being considered with trading right now. That's just something to keep in mind. Another reason behind the spike, jobless claims hit a 7-month low. Again, not going to read everything, but it says weekly figures from the Department of Labor showed initial claims for unemployment insurance falling to 216,000 the week ending November 22nd, a 7-month low. And then right here it says the drop suggested that layoffs remain historically subdued. So we'll look on this. It also talks about durable goods orders surprise to the upside. So at the same time, new orders for manufactured durable goods rose by 0.5% month over month. And the Commerce Department and subsequent private analysis noted that the increase was broadly based and stronger than some earlier estimates. So right now we're looking at jobless claims, we're looking at durable goods, we are looking at the rate cut that's coming soon. And then another one of that cluster he talked about right here was the Chicago PMI plunges deeper into contraction. So the most alarming signal, we'll read a little bit more of this one. The most alarming signal of the week came from the Chicago Business Barometer, commonly known as the Chicago PMI. The index fell sharply to 36.3 November reading, down from 43.8 a month earlier and well below consensus forecast. That level marks a long stretch of contraction for the region and points to an increasingly strained manufacturing sector. And then for metal traders, it says the combination of a strong headline spending on durable goods and a collapsing regional PMI hinted at a more complex backdrop. Businesses appear to be investing, but pockets of the industrial industry are clearly under stress. Silver, with its dual role as both a monetary and industrial metal, has become a focal point for investors trying to hedge both scenarios. So we've talked about that many times on this channel about how silver isn't just an industrial metal or a precious metal, it's both. And that is one thing that I love about silver. You know, we've talked many, many times on this channel about the massive increase in demand for silver in industry. I don't think that's going to be slowing down anytime soon, especially as you look at the ramp up of data centers for AI, so on and so forth. I've said before, they're even talking about building a data center that orbits the planet. It is incredible. And if you look at other markets, like for example, like SSDs and RAM for computers have skyrocketed because such a high demand for AI categories that it is eating up the market. And if you know anything about computers, if you were to go to buy an SSD for your computer or buy more RAM for your computer today, like DDR5, it would be more than twice as expensive as it was this time last year. But getting back to the article, I also want to point out right here where he says Fed expectations and a softer dollar. And then right here he says overlaying the data is the Federal Reserve calendar. The next policy meeting of the FOMC is scheduled for December 9th and 10th. And financial markets are once again pricing in a strong chance of a quarter-point rate cut following the easing move in late October. So we just talked about that. We're not going to get into it again. But again, these rate cuts are being priced in already. So we'll kind of scroll past some of this. Why is silver moving more than gold? It says gold has played a familiar role as a macro hedge throughout 2025, repeatedly testing and at times surpassing its prior highs of near $4,000 an ounce. Many of those moves were driven by concerns over fiscal deficits, geopolitical risk, and the possibility of a deeper downturn. And as we know, gold is above $4,000 and has actually been holding there for quite a while. So this comment, I mean, maybe I'm misunderstanding it because it says highs near $4,000 an ounce, but surpassing prior highs. Okay. Yeah, I guess I don't understand that one. We know it's well above $4,000 an ounce, but anyway. Silver, by contrast, has been catching up from a much lower base. It remains a fraction of gold in absolute price terms, yet it is tied closely to sectors that sit at the center of the global energy transition. We've talked about green energy. We've talked about EVs. We've talked about so many things already on this channel This is part of what I've been saying for years. I've been saying that as we push towards green energy, we push towards more EVs, data centers, etc. Basically, the modern world is going to require more silver, and definitely you should be stacking silver right now. That is not financial advice. That is only my opinion. But I think silver, I'm so bullish personally on silver right now over gold that it's not even funny. I don't think I've bought any significant amount of gold for my deep stack in a while because it's all been silver. But let's move down. Again, pause if you want to read more of that. And then, so we're not going to get into this, but he also talks about the junk silver refinery backlogs in the physical market. And we're not going to get into this because we've really talked about this a lot lately. And then we are going to scroll down here to breakout or blow off. He says the key question now is whether silver surge represents a sustainable breakout or a textbook blow off rally. Rapid spikes often invite sharp corrections as leverage positions are unwound. At the same time, many significant repricings in commodities begin with a period of extreme volatility and I want to highlight this. They begin with a period of extreme volatility that looks irrational in real time, but ultimately marks a new trading range. And I definitely want to point out that recently I actually talked in a video about where I went on a Thursday to a coin show and I bought silver at $53.50 and it dropped a couple of dollars within an hour of me purchasing it. And I said I was only regretting that purchase because I didn't wait an hour or two. I wasn't regretting that purchase overall because, as I've said many times recently on the channel, I absolutely believe in silver. But he's right here. There is a lot of volatility in the market. And one thing I will tell you that is if you see a big run up like this, like silver spiking, in fact, let me just refresh right now. We're just going to kind of do a quick refresh. Well, nope, it's definitely still going up right now. You can see 56.64, but right here, I want to talk about, this is what we're talking about with volatility right now. And let's take a look at this volatility. So I just zoomed in. This is from October 1st to today. And you can see we were at 46.99 October 2nd. You can see we spiked all the way up to 54.24, all the way down to 46.76, back up to 49, back down to 47, up to 53. And then this, I think this was that Thursday I bought that silver I did that video on right here, 52.28. Keep in mind, these are closing numbers. So when I bought it, it was like 53.50. By the end of the day, I did close to 52.28. But anyway, back down to right at 50, back up to 51, under 50 again, and then going all the way back up here to 56.63, and that's where we sit right now. So yes, a lot of volatility, and I honestly don't think the volatility is going to slow down anytime soon. By the time this video posts, by tomorrow, by the end of today, who knows, we might see it pull back. We might see a lot of these gains erased, but over $3 an ounce now as we are recording this video, and that is an insane gain in silver. I would love to see what happens next week, but guys, I think it is going to be a wild ride. We are going to see some ups, we are going to see some downs, but as I said in my video just recently, in fact, as I'm recording this yesterday, it doesn't matter at the end of the day to me if it goes up or if it goes down, because I'm in it for the long haul. And I think personally, not financial advice, I hate to say it twice, but not financial advice, I personally think that in 20 years, we're all going to be happy that we are stacking silver today. And that is why I am always stacking for the long term. When it comes to my deep stack, I'm always stacking for the long term. But I would love to know what you're doing and what you think. So guys, leave me a comment down below and let me know. I would really love to hear your comments on this video. Do me a favor, don't forget to like and subscribe if you haven't done yet. Continue to help us to grow. We're almost at 250,000 subscribers. That is insane. So thank you. And other than that, don't forget to stack long, stack heavy, and have a great rest of your day.